Last year I left the teaching career, so I was doing it part-time until I left and then focused on property full-time. The reason I got into property was for an additional income. I was teaching at the time and thought that having an exit strategy that would be useful so that I didn't have to teach until I was 68. My aspirations in property are to continue to build my portfolio. I would like to systemise it as much as possible so that it is as passive as an income stream as possible. But also, I want to build it and do something creative. I want to just see where it goes, really. Property is something that there isn't really a limit to it. Who knows whom I might meet or what property deal I might come across. So I like the fact that it's just limitless.
Michelle, hi.
Hi John.
I'm John Howard and I'm delighted you've come today, and we all are waiting excitedly to hear what you have to tell us.
So today I'm here to offer you 25% equity for £200,000. This is a pub that's been closed down and it would be converted to a 10-bed HMO. The total cost for the renovation works would be £277,000, including that the refurb costs is £95,000 and the revaluation we're looking at £350,000. At the end we estimate £35,000 to £40,000 to be left in the deal. As it stands, it's 66% ROI.
Where should we start?
Let me kick off, Michelle. I'm an HMO developer, so I know this market very well. Can I ask the size of the rooms?
They'll all be above the minimum 6.52, double rooms, and they will put en suites in all of them.
Okay.
The area that it's in is for working tenants, so we're not going to be going super high end on the refurbishment.
Okay, no problem.
Yeah.
And have you got planning for it? It's the main question. It's a pub, so it doesn't look like it's got permitted development rights of any
Yeah,
sort.
so it'd be subject to planning.
So the deal we would offer would be subject to planning. Okay.
What's the total income once fully, if fully occupied?
So it's £4,000 a month. The annual rental is £48,000.
Sorry, have you already said where it is?
It's in Bootle in Liverpool.
Brutal.
What is that L?
It's just outside. It's outside the city centre, and it's in a place where it's close to the network links.
95 seemed quite light for a refurb on something like this. That seems a bit low cost.
I'm working with a builder who is a good contact of mine. So he's done a project for me. He's doing one at the moment, and he's been around the site, and that's at cost price. So I'll be offering him a finder's fee for this.
And will that be under a main contract with him? So he'll be a main contractor under
He would be,
a
yes.
JCT contract?
Yeah. And also he owns a letting agency as well, and they have got links between Wirral and Liverpool. So I'd be working with him to fill it. Ideally we'd have it tenanted, taking the deposits before the revaluation to prove the income.
There's really good parts of Liverpool, obviously, and there's parts that aren't so good. Where would you put this, do you think?
Like I say, this is not for high-end professionals. It's not right in the city centre. It is on the outskirts, and it's aimed at people working in the local industry. So,
What are the transport links like there into the city centre?
5-10 minutes into town.
For me, I used to do it 35 years ago. Goodness me, that long. It's not really for me. I don't tend to do that sort of thing, and to be fair, there's too much more experienced people on the panel who I'm sure could help me better than I could. So it's not one I want to invest in.
So you're buying for how much?
So 180,000 is the purchase price.
Okay, and the cost of the works?
It's 95. It's on the market at 225,000 at the moment.
What gives you the indication you can get it for 180? Have you spoke to the agent?
We've had an offer subject to proof of funds.
Have you made that offer subject to planning, or are you buying it
To buy it cash, yeah.
And how likely do you think you're going to get planning on it?
Very confident. Yeah, just because of the location where it is, the council policy, and bringing derelict pubs back into,
Geographically, it doesn't really work well for me, and knowing there's a couple of people here who it would definitely suit much better, I'm going to leave it to them. Unfortunately, I don't think it's going to be one for me. Thank you, though.
Well, I'm a lot more interested in it. because I like this kind of projects. What do you think the end value is going to be when it's all finished?
50,000.
350.
Yeah.
Okay, so when you do a commercial refinance, you think you'll leave about 40 in it, maybe?
Yeah. So
Okay.
it's based on the local area for £35,000 per room at 10 rooms.
Right. So what exactly? You said you're offering a 25% share in it. From experience in the room, I'm not sure if that would quite appeal to some of the people in the room. I don't know. Anyone interested in that kind of level?
Well, I think, Simon, you have to make your own mind up.
Well, yeah. I'm just.
I mean, what you're trying to do is see what everyone else is going to
Of course,
bid.
I want to do that.
And I'm not sure that's really fair.
What do you mean, like you did last time?
I don't think I believe I did that, did I?
Whilst they're squabbling, Michelle, can I ask you that the 25% for 200,000? So you want 200,000 of equity?
So the 200,000 would pay for the that would pay for the purchase price for 6 months while we do the works, and then at the end of, well, we've estimated 7 months to do all the works, then revalue it, and then obviously you get the money back, and then
whatever you can pull out at the end.
Well, Michelle, clearly you've done really, really well to get to this point in your career. So congratulations. You've done incredibly well, so that's great.
I'll just be honest, I think you've done great. I think you know your apples. I'm very strict with the way I do buy to hold strategy. I want to get all my money out. I'm not interested in two-year paybacks. So this one's not for me.
Yeah, I'm really interested actually. I think it's. Are you going to be managing this? Who's going to be managing it? It's the builder.
So yeah, my contact, he's got a building company, but also a letting agency. So
Okay. For the money that's left in, what kind of return are you offering on that, or is it just 25% share is what you're proposing?
That's the initial proposal. I'm open to suggestions.
So what do you think the cash flow is going to be on a monthly basis after the mortgage and the bills and everything?
1,921.
So that's about 10% return maybe on the money left in. That's not bad. I'm kind of interested. Are you interested?
I'm interested.
Well,
He's waiting for you.
of course he is.
I'm thinking might be interested in sharing it.
That might be a good idea. But I think
If the bank manager's interested,
would there
you've done well.
would there be a bit more equity stake we could get maybe? Well, obviously you've got another partner in it, this builder.
No, so he's taken a step down from that.
Is he?
Yeah.
Okay.
And just to clarify one other question before I may, the planning side, are you happy to accept an offer subject to planning
Yes.
to take that risk
Yeah.
out for us? And you can hold the property whilst that goes ahead?
If we can give proof of funds,
Yes.
could you maybe secure it on an option or exchange with a condition about getting planning? Do you think?
Yeah, I would.
I think we can probably help
She
with
just
that.
said
by
she
the
can
sounds
do
of it.
that.
So,
Subject
Subject
to-
to,
she's already
subject to
agreed it.
that.
yeah.
These two could help you do that, Michelle. So,
Yeah.
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 On the equity, would you potentially look at higher equity for less
Well,
cash flow?
I think it would be great for us to do because we've got similar experience to this. It's quite good fun to do that. But how about, could we go to 30% or 35% if we're going to split it between us?
I was going to go in at 50%, to be honest, Simon.
Oh, okay.
25% each. But I'd drop to 40, I think would be fair to do 20 each.
That would work.
And so I own the largest international property forum. We're HMO developers. We've got about 20 million under build. Simon obviously runs significant businesses as well. So we have the very relevant expertise for this deal that warrants that.
You would have two great partners, I have to say. I almost feel a bit jealous.
So should we do a deal now before John wants to jump in then, do you think?
I said I'm out.
Is John? Oh yeah, he's
Subject
running
to
this.
sorting out obviously the planning, etc. So what we're saying is 40% equity, we're both coming to 20% each, 6 line share to you, and that could be a good deal. You happy with that?
That's what
Do you have
we're
that, Michelle?
that's what our offer
And
is.
what about the monthly income then? Or the money left in? So
Well, I don't mind leaving some money in as long as I get a reasonable return on it. So
Yeah, likewise.
that return, if we were getting 40% of the cash flow between us, 20% each, that would be happy.
And
Happy with that?
we'd help you with the finance as well, trying to get
Exactly,
the best
yeah.
finance deal so that there's as little money left in as possible for everyone.
Yeah.
so could we just talk about the cash flow? So
Yes.
so when that comes in each month,
So when it
for
comes in,
higher
each month,
equity, is there any negotiation on that cash flow?
take off the expenses.
Yes.
Yeah, and from the profit. So if it's not profitable, we all suffer. If it's profitable, we all benefit. And 40% of the profit we'll be split between myself.
Yeah, we're taking risk for that as well. So if there are void periods,
Exactly,
it takes
yeah.
time to fill up.
And if there's a mortgage to pay, we'd have to pay 40% of it.
Yeah,
That's a great
so
deal.
we're
for you.
liable. We're equally liable as well as equally.
Michelle, can I just say, it sounds a good deal to me, and not only that, if you've done it once with these guys, you may well do it again and again and again.
Yeah.
And
So
it's a
they
good
could
thing to
be-
say. I'm
They
JV.
could be great future partners for you, because I mean, in my career, I've had lots and lots of different financial backers and partners, and it's a good thing. You know, sharing the risk sometimes is sensible.
We'd definitely be interested in a local partner in Liverpool.
Great.
So.
I'd like to accept them.
Right.
Well done.
Congratulations.
Congratulations.
Michelle, hi.
Hi, Stephen.
So tell me, how did it go?
It went really well. Absolutely delighted with the result, and it went a lot better than I expected.
Are you happy with the money you got?
Yes, very happy.
And you're happy with the percentage you've given away?
Yes, it was. It was a little bit more than what I was expecting, but it was. You know, I think it's still fair, and to have both of the investors on board, their experience.
So you've got two angels on board. That must be hugely valuable to you.
It is,
A great
yeah.
assistance, I'm sure.
Yes.
Well, look, well done. Good luck with the project, and you have a very safe journey home.
Thank you. Thanks for your time. Bye.
Good.